I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined?
Bitcoin is seeing a lot more pushback on its carbon footprint, and that's causing a dilemma for some fund managers.
Either less energy unto itself, though I know there are efforts for that. Can you start using solar and wind and all sorts of things? And I know there's efforts to do that.
A lot of institutions are asking that question. And ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class, and from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this, because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment, but I think that the spotlight on the environment is going to cause something really interesting to happen here. We just wrote a paper with Square about the ramifications of putting Bitcoin mining into a solar Powerwall merchant power ecosystem so that it could absorb all the extra energy coming from the sun after the battery, the power pack is filled up. That would add a new dimension of economics to this ecosystem and would encourage homeowners and utilities to add more solar to their own ecosystems than otherwise would be the case. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. I will say, we heard that some institutions were taking advantage of this 50% drop in the price. They had been worried about top ticking. And I think they believe that half of the solution is understanding the problem in terms of ESG and just putting a spotlight on it. So I think some institutions have been opportunistic, but not very many. I think this was more of a showstopper, at least temporarily, for a lot of institutions. I think a bigger point that needs to be made is that progress takes energy, and it seems as though any lightning rod involving, in this case it was coal in China, is going to turn back the clock. But we really need to keep moving forward. This is progress, a DeFi system that does not fall apart after assets are cut in half. That's a pretty powerful source of progress, I think, from a financial system point of view. And I think just, again, the notion that Bitcoin mining could actually help renewables proliferate faster than otherwise would be the case, I think is going to win the day here, and that ESG will not be as much an issue as people think going forward. I think this volatility is almost good news because it is a lesson. Hey, this is a volatile asset. As long as investors describe it accurately, or asset managers describe it accurately as, very volatile, although the volatility, if you look long term, is coming down. It's still very volatile. I do believe this notion of a super cycle would never have another 50% correction. That's out the window. That's good. That is really good, because regulators don't like any guarantees like that. So you've got that one out the window. You've got the price lower, so individuals won't be top ticking in the mid 60s, right? Much better price here. We took a look at how the ecosystem is likely to evolve, and I think we used, I think it was 1 million Monte Carlo simulations just trying to figure out, okay, if institutions start moving in, where will they go? Well, they'll tiptoe in. A Mass Mutual, I guess, was $100 million for their general account, which is it's probably 0.002% of their general account. So that's really tiptoeing in, and just gives you a sense of how far we have to go. According to those simulations, in order to maximize the Sharpe ratio, an institution might move towards, in crypto assets, we did it on Bitcoin, 6% of a portfolio in Bitcoin, in order to minimize volatility and enjoy the increased return associated with crypto. That percent might be more like 2.5%. And it reminds me of the emerging markets in the 1980s. MSCI came along and said, hey, wait a minute, these countries, they're all emerging markets very early on, but they each have idiosyncratic risks. Why don't we put them all together in a portfolio? And returns will be higher, risk lower than in any one alone. I think the same thing's going to happen to the crypto asset ecosystem, starting with Bitcoin and Ether. Institutions will become a very important part of this ecosystem. And if we use those two numbers, that range 2.5% to 6.5%, you go towards the upper end of that, say 5%, that alone would add $500,000 to Bitcoin's price, just as institutions try to get a foothold in. So we're extremely optimistic about Bitcoin, and I'm more optimistic now after this correction. In the equity market, you call 20% a bear market. I don't know what they call a bear market in crypto. So I feel, though, that we haven't even begun the institutional movement into this.